Business entity concept. In accounting, we always treat business as a separate entity. What does that mean? That means that a business is a distinct entity from a legal perspective. It is an entity that exists apart from its owner or owners, who are called the stockholders or shareholders. However, the business has many of the rights that a person has. For example, a business may buy, own, and sell property, enter into contracts, sue, and be sued. Items that the business owns, its assets, we'll learn about it in chapter 2. And those items that the business has to pay later, its liabilities, belong to the business and not to the individual stockholders or shareholders or owners. The ownership interest of a business is divided into shares of stock, usually. A person becomes a stockholder by purchasing the stock of the corporation. There are many types of business: sole proprietorship, partnership, and a joint stock company. But for the time being, just understand that whatever form the business takes, it's a separate entity than its owners. In a nutshell, the business entity concept implies that the affairs of a business are to be treated as being separate from the non-business activities of its owners. The items recorded in the books of business are, therefore, restricted to the transactions of the business. No matter what activities the proprietor or proprietors get up to outside the business, they are completely disregarded in the books kept by the business. The only time that the personal resources of the proprietors affect the accounting records of a business is when they introduce new capital into the business or take drawings out of it. A lot of examples are coming your way in the next lessons. Stay tuned and see you in the next lessons.